Hidden from the history books lies a global battle fought not with soldiers, but with money itself. This is the forgotten currency war, the economic showdown that quietly reshaped the 20th century. A currency war begins when nations compete to weaken their own money to sell more abroad, a silent tug of war for power. In this war, devaluation becomes the weapon. When your money buys less, your exports suddenly become more attractive. After World War I, Europe was broken. Debt piled high, economies shattered, the perfect breeding ground for financial warfare. Most countries still tied their money to gold, a rigid system meant for stability, but one that chained recovery. As the Great Depression hit, unemployment soared and production collapsed. Nations grew desperate for a quick fix. Britain made the first move in 1931, abandoning the gold standard and letting the pound fall. One by one, nations followed. France, Italy, the United States, all joining the race to the bottom. At first, exports boomed, but soon inflation and mistrust crept in. Nobody could agree on what their money was worth. As currencies fell, trade between nations dried up, exports collapsed, and global demand vanished. Every country tried to out-export the other, but if everyone wants to sell, who's left to buy? Currencies fell week after week. The dollar, the pound, the franc, all racing downward. For ordinary people, it made no sense. Yesterday's wages couldn't buy tomorrow's bread. Devaluation sparked inflation. Inflation fueled panic. It was a spiral no one could stop. There were no global rules. Every nation defended itself, even if the whole system broke. The once sacred gold standard collapsed, a system that had anchored money for centuries. In the early 1930s, the United States made a pivotal move, adjusting its monetary policy and loosening the gold constraint, marking a dramatic shift in global finance. Other nations retaliated, raising tariffs, hoarding gold, and tightening capital controls. By 1935, global trade had shrunk by more than 2/3. The world economy was paralyzed. By the mid-1930s, the worst seemed over, but beneath the recovery lay a fragile and divided world economy. In 1936, the major powers struck a deal, the Tripartite Agreement, to end the race of endless devaluations. For a brief moment, currencies stabilized, trade revived, and optimism returned to the markets. But the peace wouldn't last. Political storms in Europe were about to turn economic tensions into real conflict. When war erupted again, currencies became weapons once more, funding armies, alliances, and empires. By 1945, Europe lay in economic ruins, a shattered system desperate for order and trust. In 1944, leaders met in Bretton Woods to design a new financial world, one built to prevent another currency war. They anchored global money to the US dollar, which itself was tied to gold, a system of promised stability. For nearly 3 decades, the world enjoyed unprecedented growth. Trade flourished and confidence returned. But by the late 1960s, pressure was building again. The promise of infinite dollars backed by finite gold couldn't hold. By the end of the 1960s, the world had printed more promises than gold could ever cover. Nations began to doubt the system. Could America really exchange its dollars for gold if everyone asked at once? Speculators smelled blood, buying gold, dumping dollars, betting the old order was about to fall. Pressure reached a breaking point. Confidence in the dollar, the backbone of Bretton Woods, was collapsing. In the early 1970s, the United States publicly suspended gold convertibility, ending an era of fixed money. The announcement sent shockwaves through world markets. Currencies floated freely for the first time in decades. From that moment on, money became fluid, its value determined by markets, speculation, and power politics. Some nations thrived by exporting cheap goods. Others suffered inflation and instability as exchange rates whiplashed. Then came the oil shock. Energy prices soared, and petrodollars reshaped global finance overnight. The chaos of the 1970s gave birth to the modern forex market, a 24-hour battlefield where money never sleeps. With floating exchange rates, a new power emerged. Currency traders who could move billions with a single call. Speculation itself became a weapon. Profit no longer depended on production, but on predicting chaos. Hedge funds entered the battlefield, turning currency movements into billion-dollar opportunities. For the first time, markets could outmuscle entire governments, a quiet shift of power from politics to capital. In 1997, currencies across Asia collapsed overnight, a brutal reminder that this war never really ended. Each crash taught lessons about greed and imbalance, lessons the world kept forgetting. As the millennium turned, money began to lose its physical form, entering the digital battlefield. Now, algorithms and blockchains fight where gold and paper once did, the currency war reinvented. While nations argue, silent winners emerge, those who master the flows of capital that define modern power. The story of money's battles never ends. It only changes its weapons. The echoes of the past still shape our wallets today. Today, every nation's economy depends on another's currency. The world is tied together by invisible money threads. Central banks became the generals of this new war, fighting not with tanks, but with interest rates and liquidity. Printing money once meant ink and paper. Now it's a keystroke that adds billions to the system. In a world of limitless creation of money, its meaning and its trust becomes fragile. The patterns repeat: boom, bust, devalue, recover, an endless loop spanning generations. Every shift in currency value ripples through daily life, shaping trade, prices, and how nations plan their future. Now, our money exists as data, the battle no longer fought on streets or banks, but in servers and code. Today's currency wars aren't announced. They're fought through exchange rates, trade balances, and interest rates. With every crisis, we borrow our way out, building a global tower of debt that leans ever closer to collapse. History whispers the same lesson. When money becomes a weapon, everyone loses eventually. From gold to data, from vaults to servers, today's financial world still echoes that old struggle for control. When tariffs fail, currencies speak louder. Trade wars have simply evolved into exchange rate battles. The balance of power no longer lies in armies or borders. It lies in who controls the flow of money. Every purchase, every transfer, every trade, all connected through a global system born from those early wars. In the 21st century, data itself has become a currency, traded, hoarded, and valued like gold once was. Modern economists and institutions still face a timeless challenge, maintaining balance between stability and growth in a complex world. Today, currency is influence, shaping alliances, funding development, and defining global relationships. Technology now dictates how fast money moves. Algorithms replace bankers and speed replaces strategy. The system looks stable until it isn't. Every few decades, the cycle restarts under new names. Look closely. The headlines may have changed, but the themes remain hauntingly familiar. The past isn't just history, it's a warning about what happens when nations weaponize their wealth. Can the modern world build a stable monetary order? Or are we doomed to repeat the same silent war? Only cooperation and shared trust can stop this endless cycle of financial conflict. From gold to data, from crisis to recovery, money's story is humanity's story of ambition, fear, and reinvention. This was the forgotten currency war, the hidden conflict that still defines how the world does business today.